Because that's how you end up with less worry, fear, stress, headaches, less confusion, less financial insecurity, and best of all, less to pay in taxes. So here are two more of my ways to lower your taxes now and forever. One is life insurance. I say it in every program, in every show. I don't sell life insurance, but there's no question it's the single biggest benefit in the tax code. Like Roth IRAs, life insurance is yet another way to leverage the tax code. This is truly the best leverage available, using the smallest amount of money now to produce the biggest amount of tax-free money later when it counts. I like to say this about life insurance. Life insurance is the only legal way to print money. I also like to say this. Life insurance takes care of families without first going through the government. Who goes for that plan? So where do you find the money to do life insurance or Roth conversions? Again, take inventory of what you have. Look at all of your assets. How many are dead or not performing? Those are the ones that you should be leveraging. Which assets can be turned into tax-free money? Which funds are not performing or have no long-term benefit? Know when you intend to use your assets. There's three kinds of money. Now, money you need now, money you'll need later, and money you'll never need. The money you'll never need shouldn't die on the vine. It should be used and leveraged. Use it, leverage it, or lose it. That's the money you want to use for either life insurance or Roth conversions. Okay, so which is better? Roth conversions or life insurance? Simple. Life insurance. The leverage is so much better. But you have to know when you'll need the money. Like Henny Youngman said, I've got all the money I'll ever need if I die by 4 o'clock. Life insurance and Roth IRAs can be combined for a supercharged tax-free plan. Imagine the Roth IRAs, remember there's no required distribution, so that's going to grow in your estate. It could increase the value of your estate, but that's where you have tax-free life insurance to be able to pay that money, to pay those taxes, so your family gets even more tax-free income. Tax-free, tax-free, tax-free. In an environment of rising tax rates, you want to move your money from accounts that are forever taxed to never taxed. Roth IRAs and life insurance are the best ways to do that. The second way to lower your taxes now and forever, talk to your family about money. That's where the big mistakes are. Better communication means your family will be better prepared to make sure your plans stay in place. Your family will be more likely to avoid mistakes. Your family will know what's important to you. Less in legal and tax fees.
Tax.
Less for your heirs to fight over, not because you had less, but because you made a plan that made it clear who gets what. This is probably not a plan. I had a client once that had a collection of these Yadros statues. You know what they are? These very valuable porcelain statues. Anyway, here was her big estate plan. She had a lot of family members, so she wrote on tape on the bottom of each statue who gets each one. Well, one day at Christmas, she found one of her daughters changing the tapes. That's probably not a good plan. I want you to have a well-written, well-organized plan, your plan, so you don't get the government plan. Speaking of kids coming over, John Paul Getty once said, money isn't everything, but it sure keeps you in touch with your children. Leverage the tax code. You don't have to be an expert, but you have to know enough to know if your advisor is an expert. Get educated advisors who are trained not only in helping you accumulate money, but to help you keep more of it. It's what you keep that counts. Taxes will be the major factor in determining how much of your wealth you actually get to keep. Find the right CPA, find the right investment advisor, find the right attorney. Remember, ask them tough questions about your exit strategy. They have to have that specialized knowledge in the exit strategy, managing the taxes on your retirement funds. Are they trained in this area? I'm going to give you some key questions to ask. And you might say, well, what questions could I ask? They're technical. How would I know if they're answering correctly? Easy, because I'm going to give you BS detectors. Isn't that good? So here's some key questions to ask your financial advisor. When was the last time they went to a course? Not sales training, but technical training. And they'll say, oh, we go all the time. Here's the BS detector. Oh, really? Show me a copy of the brochure or the course manual. It has your notes all over it. Oh. I know, here's another question. I know, see, it takes just a few minutes and you'll know if you got the right person or not. I know this area requires specialized knowledge in IRA distribution planning. Do you have expertise in this area? Oh, of course I do. How would I know that? What books have you read on the topic? I've read all the books. BS detector? Show me one. When they show you the book, open it. If it cracks when that book opens, run! That's the first time that book has ever been opened. See, it's easy to tell if you've got the right person. How do you stay current on key IRA tax rules? Do you know they change almost every week? What services or resources do you rely on to stay up to date? Can you show me a sample? Who do you turn to when you have questions on IRA distribution planning? If they say, nobody, I know it all, no one can know it all. I've been studying this stuff for over 20 years, and I still go to other experts to discuss questions that I have. Well, now you're ready to take action. In order for all this planning to work, you must take action now and stay on course. Like in golf. This golfer says, he says this to his caddy, this is the worst course I've ever played on. The caddy says, this isn't the golf course. We left that an hour ago. You have to stay on course. Like the Fed chairman recently said, the ex-Fed chairman, Greenspan, recently said, I was right 70% of the time, but I was wrong 30% of the time. Well, the captain of the Titanic was on course 70% of the time. But that's not good enough. To be successful, you have to stay on course. Some people wonder what success is. You know what I think success is? Success is when you have your children's lifestyle. Right? Who wants to live like them, right? And you have to set priorities. You have to make a plan and set priorities. I know when I used to do estate planning seminars years ago in my home state of New York, I found that nobody would do estate planning in the winter. I couldn't believe it. I would say, what about the estate planning? Well, I've got to go to Florida. You know, it's a law in New York. Yeah, got to go to Florida. Don't want to miss the Canasta Convention. Got important things to do. You have to set priorities and take action. I remember a beneficiary once came back to my office. He said, my mom died, we paid a fortune in taxes. How can this be? My mom went to your seminar. I said, yeah, but all she did was eat. You have to take action to create your plan so you don't get the government plan. The more you plan, the more you keep. So who's going to start the process? Well, if you're single, it's you, maybe with the help of your family, but it's a little tougher when you're married. Then someone has to make the decision to take action. Who is it going to be? Well, for this, I went to a much higher authority to help you out. Albert Einstein. I saw this in a book. This was a quote on his 50th wedding anniversary. He said this, when we first got married, we made a pact. It was this. In our life together, it was decided that I would make all of the big decisions and my wife would make all of the little decisions. For 50 years, we have held true to that agreement, and I believe that is the reason for the success in our marriage. However, the strange thing is that in 50 years, there hasn't been one big decision. If you make the right decisions, you'll end up with more. More money for you to enjoy now, more for your retirement, more for your loved ones, and more of it tax-free. And less too. When you get more, you get less. Less stress, less headaches, less worry and fear, less confusion, less financial insecurity, and most important, less to pay in taxes. Vince Lombardi once said, the Green Bay Packers never lost a football game. They just ran out of time. Well, we're out of time now. So when do you get started? 3 words, while you're breathing. Works better that way. 2 words, right now. Create your plan so you don't get the government plan. Remember, less is more. The more you keep, the less you pay. Keep more and pay less. And if you keep more, you end up with more money for you to enjoy now, more for your retirement, more for your loved ones, and more of it tax-free. Lower your taxes now and forever. Thank you. Thank you.